Good morning. It's Thursday, May 30th, about 6 a.m. Central Time. Overnight, the precious metals are getting hammered after yesterday's weaker session. Given the weakness in copper, gold, platinum, and palladium, I found silver's strength yesterday just quite suspicious. Additionally, the U.S. dollar posted the highest close in 2 weeks. Two-year Treasury yield threatened to break through 5%. The Dow Jones slipped over 600 points. Essentially, it was a sea of red out there and not your typical setup for higher silver prices. So if you're working with me closely, chances are you continue to reduce some exposure in that area of the portfolio. Now, by all means, I'm not bearish on the silver market. I just find it prudent to call time out and reassess the situation. Futures trading is about efficiency, and we can get back in as easily as we can get out of a trade. So looking at some data releases overnight, we saw the Eurozone had indicated that they have a stronger labor market, questioning the possibility of that June ECB rate cut. Now, today the U.S. will release a flurry of economic data here, including the second reading of first quarter GDP, initial claims, and pending home sales. However, tomorrow's PCE deflator gauge, that's the Fed's preferred inflation metric. That will be where the big fireworks occur. So we'll see what happens here today. If you look at the chart pattern though, and if you really start to look and break down like what are the things that impact these each individual commodities, and it doesn't matter which commodity it is. You know, if you look at the agricultural markets, you're going to look at supply, demand, production, the weather, U.S. dollar, China's demand for it, what South America is producing. All you got to do is monitor 4 or 5 things here, and you'll have a general gauge here, and you kind of go with the flow, in my opinion, as far as the chart pattern is concerned. Yesterday, looking at that silver market, it just threw up too many red flags. Dollar index, again, 2-week highs. You got big risk-off sentiment in the U.S. equity markets. Gold couldn't hang on. Platinum, palladium couldn't hang on either. It just seemed like silver was going to play catch up here. So I'm not saying silver is going to be down for the count here. I'm just saying that it's a little bit susceptible to a correction. So the critical support, kind of like my line in the sand on the silver market, it's like saying, hey, what's going on here, like really, is if it broke that 30.23, which is going to be your May 24th low. Now the market could break out back above 32.55, and that would take out yesterday's high, the double top high, and I think that it could be party on for our next wave higher here. So we're just in this kind of consolidation phase. Many times when you look at double tops on a chart, which is what we have, those tend to hold. The double tops and the double bottoms tend to hold, but the triple tops and the triple bottoms, those are the ones that we usually break through and violate. So usually the bulls and the bears, they defend those levels the first go around, and that's the double top and double bottom. It's the triple when they're like, hey, this is too much. They've applied too many positions on, so when it breaks through, it takes them to an uncomfortable zone where they've got to lighten up. They go on margin calls, things like that. So looking at the copper market, now this was kind of the bigger red flag, was we saw that big sell-off in the copper market yesterday. The correlation between silver and copper right now is quite high because of the fact that 73% of copper mining is what produces silver. So the copper mining has been struggling, and then the silver production levels have been struggling while the demand has been increasing. So that's what kind of got us going in the first place here. But when you start to see some red flags being shot as far as copper selling off so much yesterday and silver holding on, little bit questionable right there. Now, we do have another 2.5% sell-off in the copper market, which has spilled over to silver, down about 2% as of this recording, down 73 cents. Seen it about as low as like $1 in the overnight session. I generally don't wake up too many times checking it out, but I was really curious here last night. Now, the gold market did correct, and you should be in August gold now. Today is going to be that first notice date. You don't want to be in June gold unless you're intending on taking delivery. It's corrected down on the August contract to the 50-day moving average, 23.49. The chart pattern suggests kind of some coiling action, maybe some consolidation. There was a big rejection of the first sell-off in the overnight session. So we'll see how the economic data plays out. I think that'll really play some kind of role. Now, at the S&P 500, a lot of you guys trade that. Traders want to keep an eye on, and this is something that I missed that I need to throw back on my screen, is the VIX, the volatility index. If you look at the chart pattern, had this kind of like, it had a kind of reversal down where it made a lower low, close on the high of the session, and then we got a 2-day little rally going on, so small breakout in the VIX. So the critical level on the S&P, we're trading 52.65. I really think that this is kind of like a support area right here, initial support. That resistance zone, 52.90 up to 5300. We close above 5300, rekindles the bulls, reignites them. Your first level of major support today, I'd say, is 52.50 down to 52.45. We break below that level, probably going to be a pretty quick washout down to 52.10, I got to tell you. So we'll keep an eye on everything here. Probably going to look at, as far as guys that are trading with me or people trading with me, I would think that if we get much more of a breakdown on the silver market, bigger washout, perhaps a 2-day correction, and then on the copper market, we'll start to look at calculated risk, call options, things like that. Not a recommendation out to the public, just something that's on my radar and things that I'm thinking about over here. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.